Okay, well, welcome to the Payback team training call. So this call, what we're going to do on this call is go over the 7-step sales process that it takes to sell life insurance. And in this particular case, it's going to be mortgage protection and final expense. IULs have a similar process, but they're a little bit different. And we'll have another training call based off of the IULs. But I wanted to start off by kind of talking about a few things before we get into the sales process. Why do we need a step-by-step process in order to sell something? Well, it's kind of like doing everything, right? I mean, if you're going to change a tire, a simple process is changing a tire. There's a certain step to it, right? You have to undo the lug nuts, then and jack it up a little bit first, then undo the lug nuts, then jack it up a little bit more so the tire's completely off the ground, pull the tire off, fix the tire. I mean, you got a step-by-step process in order to do it, right? If you want to clean the house, maybe you're going to clean it from top down. Maybe you're going to wipe off if you want to clean the kitchen, you want to wipe off the countertops and then clean the floor afterwards, right? Well, there's a sales process in any type of sales that you're in. And in life insurance, it helps your brain to move forward in a step-by-step process if you know the process, right? It's kind of like a guide that you can follow along to get to the end of the roadmap. Give me a second here. I don't need to put this on focus so nobody bothers me while I'm on here. Okay. So it also helps the client as well. And the reason why is because now they're getting led down a process that they kind of feel familiar with, right? And we're going to guide them along the way by preparing them of what's going to come next. Okay. So another thing that I want to talk about is two more things, and write this down. One of them is you need to control the conversation. The next one is you got to have good posture. Okay. So control the conversation. What does that mean? Well, if you let the client control the conversation, they're going to ask you questions. They're going to start throwing you off track. And then you're going to have to figure out, how do I get back to this? And then it becomes answer the question, they ask another one. Answer the question, they ask another one, right? Write this down, the person that asks the questions controls the conversation. Okay. And the reason why is because when you ask a question, that gives you the authority to know something, right? And throughout the sales process, what we're going to try to do the best we possibly can is ask the best questions that we know the answer to, unless we want to open it up to gather information. Okay. And we'll kind of get into more detail in that here in a minute when we get into the process. But whenever you have an objection, the way we want to answer that, and I'll just, touch on this just in a little bit here, but the way we want to answer an objection is calmly leave some space in between the words. Don't jump on them, answer the objection, and then get right back into it by asking another question. Okay. The next thing I wanted to talk about before we get in there is called having good posture. And by having good posture, what we're going to do, it's kind of like, sitting in a chair. But if we're sitting in a chair, we don't want to be all slumped over. After a while, it's going to give our neck some pain, maybe our back some pain. But on top of that, if your head is down, our thoughts are kind of down, right? But if we're happy, we got kind of a smile on our face. And so there's a kind of a little trick to get us happy if we're not in the right mood, and that's to just walk around with a fake smile on. Because once you start smiling, your brain starts to say, "Oh, I'm happy right now." And all of a sudden those thoughts kind of fade away. Well, while we're on the phone with the client, if we're talking real slow and timid and we're not sure about what's going to happen, that client's going to feel that energy on the other side, and they may start taking over and taking control of the conversation. Whereas if we're on the phone and we talk a little bit with a higher tone, a little bit more power in our voice, sit up straight so our brain says, oh, I'm confident, I'm ready to go. And you talk with a little bit more power in your voice, they're going to understand that you're in control, right? And so when they do give you an objection or they do ask you a question, you can answer the question, get right back around and ask them a question. Sometimes if they try to take over the conversation, I'll ask a question with, or I'll answer their question with a question, right? Well, how much is it? Well, how much do you want to spend? You know, it's just a simple way to just take control back. Okay. Now, if you don't have the sheet, I think they have just uploaded it into Discord. So you can download it, print it out, keep it. But by show of hands, who has the sheet, by the way? Okay, so one person. Okay. Do you have access to our Discord chat, Mindy? Yeah. Okay. So
Yeah,
it's
I'm
in.
getting on there right now.
You are. Okay, cool. So it's in there. You can download it, print it out, make notes on it, do whatever you want to do. Again, this is a guideline to help you get through the 7-step process. This call is, or this training is going to complement our training from the last week. So if you haven't heard that training, go back to the YouTube channel and you can listen to that one, and then listen to this one as well. Or if you want to listen to it again, you're more than welcome to. So the first thing that we're going to do is get the client. Step one is the introduction process. Okay, this is where we're going to start building rapport. We're going to get the client comfortable with us. Okay, and the way we do that is ask questions, right? Because if we can get them to open up, now obviously here we're not going to know the answer to the questions, right? But what we want to do, the whole goal is to get them to understand that we really, really want to help them. And we really, really, really want to understand what their situation is and their needs are. And so by doing that, we're going to ask questions to find the need of what's the reason why they want life insurance? What do they know about mortgage protection life insurance? What do they know about final expense life insurance? And you'll find that most people think they know what they want, but they don't know anything about life insurance. And here's a perfect question to ask them. Do you know the difference between a term and a whole life policy? Most people will say no, but you'll get some people that say, yeah, I do. And then the next question I always ask is, okay, how about you tell me what you know, and then I'll fill in the blanks, okay? Well, how about you go ahead and you tell me? That's what they'll say because they don't know. And so you're the doctor, right? You're the one asking the questions. Where does it hurt? You know, does it hurt when I touch you here? Why does it hurt? What have you been doing in the past? What kind of foods have you been eating? That's what a doctor would do, right? Well, you're the doctor in life insurance. So we need to figure out what the problem is. We need to figure out what the need is, and we need to figure out their why and how, and all of that is going to determine how we can help them, which type of a policy we can put them in, which type of a maybe it's a whole life policy that they only need 15,000 to cover burial. Maybe they want to grow cash value in a policy. Maybe they just want to protect a mortgage. Maybe they just want to leave a little bit behind to their loved ones if something were to happen to them, as like a last love letter, right? Sometimes people want to leave 10, 15, 20,000 behind to their kids or their grandkids, right? We can design it to help them figure out what their need is, right? So once you find the need, right? Okay, so some of the questions that you want to ask, and write these down. Okay. What got you interested in mortgage protection life insurance? And then you just shut up and let them talk. And maybe they'll say something like, you know, well, I've been looking around on the internet, and, you know, my sister died or my cousin died and she didn't have any protection. And so I got to thinking, you know, maybe I should get some type of protection. And then I seen this ad that talked about protecting your mortgage. So I wanted to know more. right? Or maybe they'll say, my cousin has been trying to tell me to get life insurance for a long time, and I just haven't done it. And now I'm ready to do it, right? So we're just going to ask questions. Maybe another question might be, have you ever had mortgage protection life insurance before? If they have, maybe it was different 20 years ago than it is now, right? So we want to kind of explain that process. How long have you had coverage if you have coverage, right? Have you ever been denied from a carrier before for trying to apply, right? And if you have been looking, here's a good one, write this one down. If you have been looking for insurance, why now? Why is it a good time? Why are we on the phone together? Why is it a good time right now to get insurance, and why not in the past? Here's another one. Why, what are you looking for in a mortgage protection life insurance policy that the other carriers or the other agent wasn't able to provide? Okay. And then once you get those information, get that feedback, now you can use that later on in the process to help them out. Okay. The next step, step number 2, build credibility. They have to be able to feel comfortable with giving you information, right? They have to, because you're going to ask for information. They don't know it yet. And you're going to prepare them to let them know that you're going to ask for important personal information. But you have to be a credible person. They have to know that they can feel comfortable with giving you that information that you're going to need in order to help them out, right? So there's 2 ways to do that. One of them is with Zippo, we have I'm sorry, not Zippo, Lead Champ Pro, we have a verified producer phone number or website. Sorry. I'm going to share my screen here with you so you guys can see it in case you guys don't have it. But I'm going to talk to you how I would talk to the client once they open this website. Can you guys see my screen, nod your head? Yeah, cool. So they'll open this up. I'll send them a link, and Lead Champ Pro will actually send a link to them about an hour before the appointment. And it'll say, you can verify my credentials here. So I make sure that they open this up, and I'll tell them, hey, did you get that link that I sent you? It's a website that verifies my credentials. The state of California, or wherever I'm calling, says that since we're doing this over the phone, that by law, I need you to lay eyes on my license. Okay. Now, if I don't say that, I find that a lot of people will say, I already looked at it, or I clicked on it, but I couldn't get it open, or I didn't have time to do it. That's the big one, right? So I'll make them click on it right then and there, and I'll go through this. And the reason why you want to do this is simply because if you don't, when you get to asking the social security number and the banking information, they're going to tell you, I don't feel comfortable giving you that information, right? So the way I do this is, I like to always try to build a little bit of humor in there as well to kind of make them feel more comfortable. When people laugh, all the stress goes away. If you ever go to a comedy club and you're sitting there laughing your butt off, you're not worrying about your finances. You're not worrying about what's going on at home. You're laughing your butt off, right? So try to bring a little bit of humor into there. So what I'll do is I'll say, okay, they'll say, I got it open. And I'll say, okay, do you see a bald guy there? Yeah, great. That's me. That's a picture of me. Easiest way to remember me is just think about Homer. My last name is Simpson as well. I got the bald head, just not as fat, right? Little bit of stupid humor, makes them chuckle a little bit. And then I'll say, scroll down, and I'll talk a little bit about what we do in our office. This is building credibility, letting them know that I'm not just some Joe Schmo on the other side of the phone. So what we do is we take care of final expenses, mortgage protection. Obviously, that's what we're talking about today. We also do indexed universal life, where you can grow your money tax-free. It's great for kids. We also protect our retirees' income through fixed indexed annuities. And all I'm doing is planting the seed, right? And then I'll say, scroll down a little bit more. You'll see a bunch of states there. And I'll say, let's say I'm doing California. I'll say, all of those states have done a background check on me federally and made me send in fingerprints. Okay. They've done all the checks they can, except for made me pee in a cup. and they kind of get another chuckle, right? And then I'll say, go ahead and click on California. It's the second one from the bottom. And then they click on that because most of the time, if they do check out this website, they don't know that these are buttons. And so I'll say, go ahead, click on that, and then you'll see a little paper icon. Click on that paper icon, and then you'll see my license pop up there. And they'll say, yep, okay. You can verify my license number with the Department of Insurance. That's basically my Social Security number for my business. Okay. And they'll say, oh, okay. And the reason why I put it that way is because I'm going to ask them for their Social Security number. Right. And so if they have my Social Security number, that makes them feel comfortable. Now, I'll have them scroll down a little bit more, and this is what I use to help them transition into my next step. Okay, and I'll say, okay, you see those carriers, scroll down a little bit more. You see those carriers there? Yeah. Okay, I'm actually partnered with more than that, about 20 plus A-rated carriers nationwide. So what that allows me to do for you is shop around, customize something that best fits your situation and your needs, but most importantly, fits your budget. Now I put that in there. That's a key phrase that I put in the document there. Why do I say that phrase? Well, there's more than one reason. Not only to transition into what I'm going to do next, but it also allows them to know that, for one, I'm going to fit it into their budget. So it breaks down that how much is it going to cost fear, right? It lets them know that I'm going to help them by customizing something that's going to fit their needs and their situation. I'm not just going to try to sell them something out of the blue. I'm going to try to make it fit their situation. But here's the number one thing that it does. It kills all of the other competitors because I can shop around for them. Now they know that I'm their guy. They don't need to shop around anymore. In fact, I probably get I want to shop around maybe once a year because of that statement right there. Because they know that I have access to all the other ones that everybody else does. And I'm going to shop around for them, and I'm going to do them right by putting them in a position that can fix their situation and their budget. And so that's a key phrase that I use right there. Now, if you don't have the website, what you would do is you'd put an email together. I have a folder. Lost my light there. Sorry, guys. I have a folder that is saved on my computer with my license, a copy of the credibility sheet that comes with the financial inventory with the carriers on there, and a picture of me. And I put that in one folder, and I'll ask them right when I'm on the phone with them, do you have an email that you have access to right now? I'm going to send you over my license, because by law, I need to have you lay eyes on my license. Now, by doing it this way, it's going to make sure that they can get into their email address, because if they can't get into their email, you may have problems later on when you get into the application. So you can help them do that. By putting a picture of you in there, now they can put a face to the name. Otherwise, you're just some Joe Schmo on the other side of the phone, right? So you want to have them look at you and see you and visualize who you are, right? And then you can do the same thing. You can have them, make fun of yourself somehow, some way, get them to laugh with the picture, then get them to open up your license, let them know that that's my license number. It's basically my Social Security number for my business. Then you can have them open up that picture of all the carriers and transition that way and say, that is basically, I'm partnered with about 20 plus A-rated carriers nationwide. So what that allows me to do for you is shop around, customize something that best fits your situation, your needs, and most importantly, fit your budget. Now, I'm going to go into the next step, right? Explain the process, okay? This is where you're going to take the time to let them know what's going to happen next. Sir, I'm sure you already know you can't just go buy this coverage. You have to qualify for this coverage. So what I'm going to do is take about 5 minutes and ask you some finance questions. I'm going to ask you some medical questions. From there, I'll have an idea of which carrier may qualify you. And then what we need to do is get you in front of the carrier. And in order to do that, we just need to fill out a simple request to the carrier. In that request, they're going to ask for a couple of pieces of information that, by law, they kind of need to ask for. One is a social security number. They use that to verify who you say you are, and they use that to check your prescriptions against the MIB. The MIB is not the Men in Black, it's the Medical Information Bureau. Number two, towards the end, they're going to ask you for a financial institution or a banking institution to be on file, like an account number, a routing number. Now, if you are approved, no money comes out today, don't worry. If you are approved, then at that point in time, they'll take that first payment. And then here's the best part. Then you're covered without having to pee in a cup, do a blood draw, or a medical exam. Pretty cool, huh? Yes, right? We want to get them to say yes along the way, right? Now, here's a key point that I wanted to point out. When you're talking about the banking information that you're going to ask for down the line in the end of the application, you want to make sure to say banking institution to be on file. Write that down. Banking institution to be on file, like a routing number and account number. Why? It came back to bite me in the butt a few times. And the reason why is because if you don't say banking account and or routing number and account number, then what's going to happen is they're going to once you get there, they're going to want to give you a debit card. And if that's the case, you get through half the application, find out that that carrier doesn't take debit cards or credit card. Okay. So that's why it's important to say, have a banking institution on file. That gives them the hint that they're not going to get charged for it today. The other thing is you're going to let them know that they're going to ask for a routing number or an account number. Okay. And then at the end, what you're going to say is the great thing about it, right? Now we're going to give them a benefit of asking this right after we told them something that they may not want to hear, right? And so we're going to give them a benefit and get them to say yes. And so what we'll do is we'll say the great thing about it is that if you get approved, if not when, if you get approved, you're going to they're going to take that first payment, and then you're covered right away without having to pee in a cup, do a blood draw, or a medical exam. Pretty cool, huh? Yes. Right? Now you got a small confirmation, okay? And that's what we want to get along the way, okay? Step 4. Now we're going to go through that financial inventory. And we went kind of in depth in this on the last call, but that financial inventory is going to determine more of where you're going to guide them and what carrier they may get qualified with, right? You need to know the finances and you need to know the health history of them, right? The reason why that's important is because if you find out that their income is $4,000 a month and they owe $3,500 in expenses, that leaves $500. You can't go sell them a $300 policy. They're not going to buy it for one, and if you do, you're going to get a chargeback. Why? Because they can't afford it, right? But if you find out that they are making $4,000 a month and their expenses with their mortgage is $1,500 a month, that leaves an extra $2,500 a month. And the rule of thumb is this. This is just a rule of thumb, and it's pretty average. It's pretty accurate. Most people will spend about 10% of their overage on life insurance. Okay, now what does that mean? If they're making an extra $2,500 a month, okay, that they're putting away or that's their spending money, they're comfortable right around 10% of that. So 10% of $2,500 would be about $250. So now, does that mean everybody spends that? Nope. Some people, they'll only do 150, 100. Other people, they may want to do more. They want 400, where they're comfortable spending 400 to protect their family, right? So that's kind of a rule of thumb. The other thing is this information that we grab from them, we can use later on, Okay, so after you deliver the price, let's say that they come back and they're like, you know what? I'm just going to think about it. It's really only two reasons why they want to think about it. One is they don't like you, or number two is it's just too much money for them. And so I always ask them, okay, if you don't mind me asking there, Josh, what is the reason why you want to think about it? Is it because I said something wrong to you? Or is it because you think it costs a little bit too much money? They're definitely not going to say that you pissed them off. They're definitely not going to say it's you. So then you're just kind of guiding them down the line to help them understand that, yeah, we understand that it costs too much. And they'll tell you, well, it just costs too much money. Okay, then you just go back and adjust the budget, and then you figure out what fits in their budget, what they're comfortable with, right? The other thing is you can say is, look, we already did, and a lot of times they'll come back and say, well, I need to figure out my finances. We just moved into the house. I need to figure out my finances. Well, sir, I mean, to be honest with you, didn't we just do that? It looks like you have about $2,500 extra per month. Let's say that you're a little bit low on that, telling me that number. So that makes it about 2,000 a month. You know, it looks like pretty much that you can afford a $250 policy. So if you don't mind me asking, what's the real reason? Is it something that I said that offended you, or is it just too much money and you don't feel comfortable spending that to protect your family? Well, that's just a little bit too much money. Okay, no problem. Let's go back and see what we can do here so that you can get some protection for your family, right? So you can use that information in more ways than one. Um, Okay, so where are we at here? So now, step 5, build the value of the policy. So by now, you've already gone through the financial inventory, you figured out their budget, you've already gone through the health questions to figure out what they qualify for, right? Because if they tell you they have diabetes, that's going to knock some carriers out, right? If they're on insulin, that knocks out even more, right? So by that time, once you figure out all of that information, now you're the doctor again, right? Now you're going to be confident, have good posture, and you're going to recommend a company and a policy. And so you're just going to tell them, okay, what I'm going to do here is I'm going to recommend a company called Americo or Mutual of Omaha or Prosperity, whatever it may be. Okay. And I just give a little snippet about the company. You know, Americo's been around for 115 years, and you know, they're based out of Kansas City, Missouri. Then what I'm going to do is prepare them for the process again, right? And I'm going to start getting into the application. And we went over that in the last call. So if you want to hear that again, listen to that on YouTube. But let's say that we have them now at a, we've already gone through part of the application, and they've already gotten past the HIPAA form. And now we need to kind of tell them about the policy that they may get qualified for. Number one, always remember, we're not going to let them know that for sure we can get them this policy. We're not going to let them know that for sure I can help them out, right? We're always going to let them know that I may be able to help you out. I may not. I mean, it really all depends on the carrier. It's out of my control, right? And so once we get to that point to where we're past all the questions, sometimes in the carriers, you have to give them the price before you fill out all the questions, but Americo, you don't have to, and that's our go-to carrier to start off on. But once we get past all of that, we want to build the value of the policy. Now, this part right here is one of the most important part. I would say it's probably the most important part out of all of the 7 steps. The next step, price conditioning, is the second to most important part. Okay. So build the value. This is where we're going to make sure to get them to grab a pen and paper and write the information down. Write that down and put a big star right next to it. Do not forget to tell them to grab a pen and paper so that they can write down the benefits of the policy. And this is the way I say it, really simple. Okay, sir, what I'm going to have you do, I'm going to give you all the benefits of the policy. Please grab a pen and paper, because I guarantee you there's so many benefits you're not going to remember them. Okay. Now, Why do I want them to write it down? It's important that you understand this, right? People learn by their five senses, right? Obviously, they can't smell. They can't smell me and they can't smell, the policy, right? But they can hear you and they can see, right? And they can touch the piece of paper, right? So if they can hear you and they can't see you, they're only learning half the information. Okay, so if we tell them to write it down, now they're absorbing the information. Why do people write down their goals? Why can't we just remember them? We write them down in a list and we visit that list every day, right? But when you write down something, your brain has to actually slow down to take in the information to learn it, because you can't write as fast as you talk, and you can't talk as fast as you think. And so your brain has to slow down. So by us getting them to write it down, it helps them understand the benefits of this policy even better. And the goal is to get them to write down line item by line item by line item by line item by line item of all the benefits of the policy. And I get them to write down the number right next to it, right? Let's say they're applying for 200,000. I'm going to just give you an example. We went into depth on the last call on this. I would have them write down death benefit or face amount, 200,000. And I told them to put right next to it 200,000. And I'll explain to them, what that is. And then I'll say, write down tax free. And I put that in big letters, right? We're getting them to write down as many benefits as we possibly can on there. The next one is chronic illness. Write down 200,000. And I tell them what chronic illness is. Next one is critical illness. Write down 200,000 and I tell them what critical illness is. Terminal illness, write down 200,000, right? Now, and then the next benefit would be level premium, right? Because people are afraid that the policy is going to go up in 5 years. Well, if it's level premium, it's not going to. And the way I let them know that is, George, you're 45 years old. When you're 50, you're only going to be paying as a 45-year-old. Pretty cool, huh? Yeah, right? So now you got all these benefits listed right down there. Now, I want to preface this and clarify here as a disclaimer, because people are going to watch this on YouTube, that I said 200,000 as the 100% benefit, because that's what the Americo policy does. Other policies like Mutual of Omaha will do 80%. Some policies like Prosperity will do 25% for critical and chronic and 95% for terminal, okay? We can do another training on the details of that later. And there's actually another training on the website for that, or on my YouTube channel for that as well. So build the value. So we want to get them to understand that it's a large amount of value for a small little itty bitty price. Okay, so that when they're buying this, they're buying a large value compared to a small itty bitty price. Okay, now price conditioning, next step 6. Okay, this is where you're going to help them understand that the price that they're going to pay for this is going to be much less than the large value that they're going to get for this policy. Okay, so how do we help them understand that? Well, first I want to help you understand that you get price conditioned every day. Okay, you see billboards out there that says, I don't know, Ford F-150, regular price, $55,000, but on sale or something for $50,000. They have a strike through there, right? You go to Walmart and you're looking at a, baseball glove for your son, and the sign says $69. And then all of a sudden it says on sale for $49, right? Or you may get double price conditioned and there's a strike through that with a clearance red sticker on there that says today $19.99, right? You see ads in your these people selling seminars and webinars and training for different things, and they'll say, there's $6,000 worth of value, and they have all the line items listed out. $297 for this, $199 for this, $999 for this. and all of a sudden it's $6,000 worth of product. But today only, it's going to be $997. You know, there's a lot of people that do that. So we're just going to kind of do that same thing. And the reason why is because it works. Why would all these people do it if it didn't work, right? The reason why it works is because whenever you get a price, there's always going to be a shock. Every single time, it really doesn't matter, right? I gave an example of buying a Lamborghini that is, you know, $100,000 Lamborghini, and, you know, somebody just wants to get rid of it and they want, you know, 10 grand for it. You'd probably go out and get it, right? But here's the other side of that. You may think that, well, if he only wants 10 grand, there's got to be something wrong with it, right? So you have to get them to price condition, or you have to get them to understand that, you know, this number is kind of where it might be, right? So there's a couple of ways to do that. You can use another policy, another type of policy to price condition. Let's say I have a client that is 67 years old and he only qualifies for a whole life final expense policy that we're going to use for a payment protection to protect against his mortgage, to give payments to his loved ones for a little bit of time to protect against his mortgage. Well, I may want to kill the term policy. Look, sir, you know, there's two types of policies out there. One is term, one is whole life. Make sure he understands what they are first. And I'll say, you know, you can qualify for a full, or maybe he can't. You may qualify for a term policy that will pay off your $200,000 loan. But let's say you take a look at the financial inventory and he only makes $1,000 a month. And so what I'll do is I'll let them know that, look, I'm not sure that might be the best benefit for you, but I'm going to let you decide. You know, if you have a $200,000 house and we apply for a $200,000 payoff, for one, at 67, you only may have that insurance for 10, 15, maybe 20 years, depending on the carrier. So it's going to end one time. And then here's the other issue is that since it's so much money and your age is kind of on the other end of the stick there, you may end up paying, you know, $600, $800, $900 a month. And then you're going to tell them what to decide. And here's how you do it. I'm sure that if you had to pay $600 to $800 a month, it may be unaffordable for you, right? Yes, I don't want to do that. So I just killed the term policy, right? So that's price conditioning. Now he knows that I'm going to put him in a position that's going to be cheaper, right? Another way you want to do it is, let's say you've had a client previously, the day before, maybe a couple hours before, who knows, and they're older, right? Let's say this person's 67. I may say, look, sir, I got somebody qualified for the same exact policy that's 73. He applied for a little bit more. I know you're only applying for 200,000. He applied for 300,000 and his payment was 776. You know, I'm sure you don't want to pay that. I know, but don't worry. Yours is going to be a little bit cheaper, right? So I'm kind of planting some seeds. What else that does is that gives me feedback, right? That gives me feedback. When I give them that high price, they're going to make a noise. They may say, ooh, right? That gives me feedback to let me know that, you know, 776 is a lot of money and they're not even thinking about paying for it. I may get feedback that says, holy moly, right? That's like a holy cow. That's a big feedback. Or they may just come back and say, well, that's not too bad. Or if that's what I got to pay, that's what I got to pay, right? Now that doesn't happen too often, but it's happened, right? You're going to get feedback when you price condition them, okay? The other thing you may need to do is price condition them twice. And the way I do that is I try to make it a little bit fun and a little bit funny. So I price condition and I let him know that, you know, I had a client that paid that got a little bit more coverage and his price was 776. But don't worry, yours is going to be cheaper than that. So yours is going to be, let me see, it's spinning right now. Yours is actually only 422. I'm just joking, right? Now you can get some more feedback, right? If they say, oh, holy cow, that's a lot of money, thank God, right? That's some feedback. Or you can say, yours is only going to be 422 and just wait a minute. And if they say, well, that's not too bad, you know that you're going to be okay, right? You're doing it to get feedback and then let them know that their price is going to be down here. Now, when you go to deliver the price, all you're going to do, I think we're on the next step now here, right? Yep. So the next step is deliver the price and close the deal, right? So the way we do that to deliver the price is, number one, you always want to make that price seem super small, right? If we say $826, that seems kind of big. But if I price condition them at $1,700, I had a client that bought a policy for $1,700, but yours is actually going to be, yours is only $826. Not a big deal, right? We're just using terminology to help them understand a point of view that we want to get across to them, right? And that point of view is that for the big value that they're going to get, protecting their family, protecting themselves while they're still alive, all the living benefits, the amount of money they're going to get for that little itty bitty price, that it's going to be worth it, right? So we want to deliver it that way. Now, there's a couple of ways to close the deal. One of them is called a 3-price multiple choice close, and the other one is a top-down close, okay? I'm going to kind of go backwards here on the sheet, and I'm going to talk about a top-down close first. Let's say that I have a client that is applying for a $200,000 policy, and maybe it's an Americo IUL, or we'll say MOO. I don't want to give anybody more credit than the other. We'll say Mutual of Omaha IUL. And he's applying for $200,000 worth of coverage, and his policy is going to be, $230 a month. So what I'll do is I'll price condition them, and then I'll say, okay, so yours is only 200, or yours is only 230. Okay. Now, as soon as you deliver the price, your brain's going to be going wild. Are they going to take it? What are they going to say? What kind of objection they're going to give me? Your brain's going to go wild, but their brain isn't. Their brain is thinking, is that affordable? Is that a good value? Can I get a better value someplace else? So you have to let them think that. You have to leave that space in there after you deliver the price, okay? Then, if they don't say anything for 10 to 15 seconds, which is a long time, trust me, 3 seconds will feel like an eternity when you're being quiet after you deliver the price. Your brain is going to be ready to move to the next level. This is where you have to have patience and just be in control, right? And they're going to give you, the first person that talks loses in a sales negotiation most of the time. But they're going to give you some type of a feedback. Most of the time, they're going to say, well, let me think about it. That's the number one. So what do we say with, well, let me think about it? Okay, no problem. Is that just a little bit too much money for you? Yeah, I don't want to spend that much. No problem. We can fit this into your budget. Okay. Always, whenever they give you an objection, say one of 3 words first, one of 3 phrases first, calmly. Okay. This is where you leave some space. And so let's do that again. So let's say they say, you know what? I just want to think about that. Okay, sir, no problem. Is it a little bit too much money for you? Yeah, I think so, right? If you come back right away and say, well, that's just a little bit too much money for you, right? Now you're jumping on top of them. But if you're cool, calm, and collected, it's like you don't care if they say no, right? Is that a little bit too much money for you? Yeah, okay, no problem. Well, I'm sure you can agree that something is better than nothing, right? Because right now you don't have anything and your family is unprotected. So let's go back and take a look here. Instead of doing the full mortgage, I have some people that want to do half the mortgage. right? And the reality of it is you're not going to owe 200,000 on your mortgage for the entirety of the time, right? And I keep saying right. You guys probably feel that. And I really do that when I'm on the phone with a client. And the reason why is because every time I say right, they're agreeing with me, even if they don't vocalize it, they're agreeing with me in their mind, right? So I'll say, why don't we take a look at 100,000? Okay, and let's say the price is, well, look, actually 100,000, that's only 126, right? I'm using words to help them understand that that's only 126. And then I pause again. And then I'll ask them a closing question. Is that comfortable for you? Or do you want to look at a middle amount? I try to bump them back up, right? Is that price comfortable for you? Or do you want to look at 150,000? Well, let's look at 150,000, right? Now they're communicating, they're working with you. It's called a multiple choice close. Okay. When you're closing the deal, every single question needs to come out as a multiple choice. Let's look at 150,000. Let's keep playing it out. Well, 150,000, that one's going to be not too bad, 186. Multiple choice question. Do you want to go with the 150? Now I'm talking about the big numbers, right? He's getting not what he's paying, what he's going to get. Do you want to go with the 150,000 or do you want to go with the 100,000? I'll go with the 100,000. Done deal. Don't talk any more about the price. You're moving on. If you talk more about the price, you're overselling it. Okay, we don't need to oversell it. So he says, I'll go with the 100,000. Great, no problem. The next step is blah, 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 blah. You're just going to move right through the application. Okay, the next step is to go and ask you the health questions. The next step is to add the beneficiaries in. The next step is to blah, 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 whatever it is, wherever you're at in the application, whatever carrier you're working with. Okay. The other close is a 3-price multiple choice close. Okay. In this case, I use this a lot of times when the client can't qualify for a term policy and they need to go with a final expense or a whole life policy to protect their mortgage, right? Well, how does a $40,000 policy protect a $200,000 mortgage, you ask? That's what most people ask. Well, in this case, what I would do is I would explain to them that there's 2 ways we can protect your mortgage. One is a full mortgage payoff, and that would pay off your policy with a term policy that would end at a certain amount of time. The second is a payment protector. Okay. Now, remember a few minutes ago, I already killed the term policy. So now I'm going to go with a payment protector. Okay. And I'll say the way this works is we at least want to give Jody, your beneficiary, some time so that if something happens to you, first of all, she can mourn your loss and she doesn't have to worry about making the payment on the house. Number 2, we want to give her some time to be able to either sell that house, refinance the house so that she can live in the house, or refinance the house into an investment property so that you can use that as an income producing, she can use that as an income producing property. Okay, in order to do that, it's going to make it more beneficial for her if she doesn't have to come out of pocket to pay her own mortgage and pay your mortgage as well. Because if nobody makes the mortgage payments on your house, you could probably agree you may lose it to the bank because nobody's making the payments, right? Yes. Okay, so let me do this. I'm going to give you 18 months worth of payments. I'm going to give you a 12-month option worth of payments, and I'm going to give you a 6-month option worth of payments. And the way I do that is I take their monthly mortgage payment and I'll multiply that times 18 months. If it's 12 months, I'll multiply their mortgage payment times 12 months. If it's 6 months, same thing. You just multiply it by 6 months. And then I plug in the amount of coverage that would cover that amount. And I'll say, okay, 18 months worth of payments is going to be $296. 12 months worth of payments is going to be $189. 6 months worth of payments is going to be $96. Okay. And I'm having them write this down. And I ask them, write this down. Okay. Then what I'll do is I'll close them. Now, obviously, we don't even know if you've gotten approved yet. I'm taking it away. The only way we can find out if you can get approved is to submit the request, and we're about 5 minutes from being done here, right? I'm telling them it's only going to take a little bit of time. If you were to get approved for something like this, which one of those are you more comfortable with? Zip it. I'm more comfortable with the 12-month, okay? Now, I don't tell them the payout, right? So if 12 months is, let's say their mortgage is $1,000 a month and 12 months is $12,000, I'm not going to say $12,000 worth of payout. Now, if they ask, I will, obviously, right? But if they don't ask, I'm not going to tell them. I'm just going to explain to them that it's 12 months worth of payments. Here's why. If I tell them that for 12 months, they're going to get a $12,000 payout, for one, it's going to confuse them. For another one, they're not going to understand how $12,000 is going to cover a $200,000 mortgage. And so I just let them know that this is 12 months worth of payments for your beneficiary, Jody, to be able to make that payment for 12 months so that she can transition into selling the house and they won't have any burden, a financial burden for the house. Okay. So that's how I do a three price multiple choice question. Okay. So we're almost finished up here. The last thing I want to say is this is a simple process, right? There's 7 steps here. If you follow this guide on every call that you're at, and go over it and over it and over it and over it before you even get on the call, it's going to help you know where you're going to be at in the process. And then here's the next thing. The way you can learn the fastest is massive, massive, massive imperfect action. Okay. Now, those 3 words you should put in the back of your mind. And why do I say imperfect? Well, imperfect gives the brain permission to make mistakes because that's how we learn. The more mistakes you make, we can learn from them. And if you can't figure out how to get around them, that's what I'm here for. That's what other leaders are for. That's what our live dial Zoom calls are for. Don't ever be afraid to ask questions. But here's the other thing. The more mistakes you make, the massive action part of that is what makes up for it. Right? You take massive action in anything that you do, you're going to learn super, super, super fast. And if you're not learning, then there's something that you're not doing. And mainly that number one thing that I find out is that you're not asking enough questions. You're not writing down, you're not learning enough, you're not going through videos learning. So massive, massive, massive imperfect action is what you need to take. That's the number one next steps. Okay.